Hello everybody. So we're going to go over a number of markets, and basically I'm just going to look for springs and upthrusts and buying of those springs and selling of those upthrusts. So the way this is done is you use a higher time frame for the spring and upthrust position, meaning the position itself of whether the market is in a spring or upthrust position is separate than seeing whether it actually is a successful spring or upthrust. So the first step is to take a high time frame and see if it's in spring and upthrust position. And the second step is to see if there's buying on a lower time frame. Higher time frame is used to identify the spring and upthrust. Lower time frame is used to see if there's buying or selling of that spring or upthrust. So which is your higher time frame? Daily. What is your lower time frame? Hourly. Hourly works. You can go a little bit lower if you like, but hourly does work, and I'll show you too. So you have the Russell that's in a spring position. And do we see buying? Yes, we do. Where is it? Right here. How much is this? It's the biggest volume in the biggest wave in 6 waves, with the biggest volume in 15 waves. 15 waves. That's buying. So when it goes into a spring position, there was buying. All right. Now, the other thing you want to see is volume off the bottom or thrust off the bottom, because very important, very, very important. The quality of the buying and selling, it depends on the quality of the bars in the wave. And though they should be big waves with big volume, and right here is that big bar with the biggest thrust in 66 bars. So that's buying off the bottom right here. That's your buying wave, which is the biggest in 6 waves with the biggest volume of 15 waves. And the quality, you want to further see the quality, you have to see the quality of the bars that make up the wave. And here's the big bar, which is the biggest bar in 66 bars. And that initiated this trend. I don't know if it's going to be a pullback or whatever, but that initiated the rest of this movement. That is aggressive buying of the spring. All right. Now, there's one more important thing that you want to check, and that is whether there was accumulation. And clearly you see there was. You just need those high volume prints, and you see it right there. And then you want to see the up move. So you want to see high volume accumulation and then up move. Right there. There it is. High volume accumulation, then the up move, which is your buying wave. So, then what happens after that? Typically you have a pullback, and the volume right there is where it's going to test. It tests and it goes up. That's how you do it. And this is like Wyckoff practical, I don't know what to call it, but original Wyckoff, kind of like with the the tapering chart, the waves, the levels, and all that. All right, next is take a look at another market. Let's just take a look at the metals. So take a look at platinum and silver. I already showed you gold, and no, I didn't show you gold. I showed you RTY, but now let's take a look at the these markets here, the metals, because why there's buying and there's springs and all of that going on there. So this market, again, the daily, you start off with the daily, you see it rallies, makes a high. At that high, what do you have? You had all this high volume, and this was distributive action. It was further proven after the heavy selling wave that occurred right here. That is the biggest down wave in 20 waves with the 5.78 times average volume. More than 5 times the average volume. And the quality of the wave you tell by the bars in the wave. And they have the biggest bar in 100 bars right here. So that basically caught the high of the swing, and that initiated the down move. All right, so now it's going to go down, 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 down. On its way, it stops at this level right here. Someone tried to buy, and it was some quality there, yeah, but it just couldn't hold up. Just couldn't hold up. So, and one of the reasons why you would not take this trade is if it has no accumulation in the background. It must have accumulation in the background. All right, even if it looks good, nice candles, nice bars, big bars, this, that, it must have accumulation in the background for it to be a high probability to trade. Otherwise, when it pulls back, there's nothing to stop it from going lower. If you want the market to be difficult to go in a certain direction, there must be volume there. And here you don't have that situation. It continues to go down. And it does so until you have some of this right here. Now it's a different game. Now it's getting really interesting because you have this volume prints, right? So something's going on, volume gets heavy, and now you have the biggest wave in 49 waves with the biggest volume in 49 waves with over 9 times the average volume. You look at what happened. It went down to the support level. It slightly broke support, and buyers came in aggressively. So that's important. You see this level? This is platinum. This is the level 902.50. It went down, swiped that level. As it did that, buyers said, we're getting in. And they brought it back up. Now, this may be because it's end of week. I don't know. I don't really care. All I know is that it's buying. And the biggest price volume in 49 waves. Not that much good quality on the upside here. But in terms of heavy volume, actually it does have this. This is the biggest bar in 40 bars. So that is meaningful, and that is a breakout of this high right here. See that breakout of this high? That's why this held, tested that breakout. So we'll see. I want to see now these pullbacks on low volume. So far it's pretty good. Anyway, so this is what I wanted to show, and I'll take a look at one more market. Was it silver maybe? Silver. So silver market, again, we look at the daily, goes down, it puts in spring position. As it's in spring position, do we have high volume accumulation? Yes, we do. Where is it? Right here. That high volume. I mean, it's not that high. I would like for it to be higher, but it's enough. Then what happens? You have a buying wave. Good. How big is it? Biggest in 9 bars, 9 waves. How much volume? Bigger than 9 prior up waves. How much more than the average? 4.61 times more volume than the average. Does it have some quality buying? Here you have that clear bar, which probably is going to prevent these guys from just breaking right through. But this is good. This is really good. Does it have the accumulation in the background right here? This whole box. See this? Something's up. And this is why you have high volume prints, because of this overlapping bars. Then it dips below from that spring, boop, buying, and then this, and then now they're selling here. But I'm not convinced that it's going to break through. I don't like the fact that it is kind of a little aggressive and all that. So just wait for one more retest, and then look for the opportunity on a lower time frame for entry. So just just want to see it kind of pull back. I don't see enough aggression on the buyers. So let it finish its testing, and then you'll know. Then we'll see if this thing can hold, or it's just because it went to a lower low, and they covered their position in the lower low. So that's also important. All right, so I think I went over platinum, gold, and silver along with the RTY spring, and I think that's about it. All right, so again, you're looking for levels first. You have to draw your lines, whether you do yourself or use an indicator. Who cares? Just make sure it's drawn so you have your points of reference. All right. Second, what is happening at those lines? Is it a breakout? Is it a spring, an upthrust, or is it a breakout or a fake out? And if it's a fake out, you want to see, is there heavy buying? This says it's heavy buying. Then is there accumulation? There is accumulation. This is the box. This is the buying accumulation. Accumulation, buying. So chances are it's going to bounce. Now what you need to do is wait for the pullback test. This pullback was a little too aggressive, which means that supply is still there. So hold your horses and wait until it dries up, and then you can use a lower time frame for entry. Right, and really get a pretty big move. So I'll be showing how to do this. This is what Wyckoff was trying to convey, by the way. When he said, for example, the levels here, right? What did he say? If you have a market going between 30 and 35, buy when it's near 30 and sell when it's near 35. And then he showed the wave chart. So I'm using the same like lows and highs, then using the wave chart. And clearly seeing the high big buying and big volume, just like he did in his study. And thing is I just have more indicators that give me more clarity. So and try to quantify. It's the biggest in 9 waves. It's the biggest volume in 9 waves. It's the biggest bar. This bar is the biggest up bar in 17 waves, 17 bars, and no, it's the biggest up bar in 17 up bars, and the biggest bar consecutively in 24 bars. So in 24 hours, this is the biggest bar. So in a whole day, this is the biggest bar. That's meaningful data, which you can then help identify the strength of supply and demand. And make good decisions. Like right here, you had a very nice selling wave on the daily. So, all right, folks, have a good day.